Hey everyone, it has been a while since I took a video, so I'm deciding to take a video. And today we're talking about the VWAP. It's the volume weighted average price. You've probably heard of it. You've probably seen a video or two on it. I do it a little differently here. It's a level for me, just like any other thing that I kind of talk about. And it's a really good level it was one of the first indicators I ever started using when I got into trading. And then it's one that I've always kind of looked back on, and I always kind of fall back on it. And with the entry condition that I've been using, that I've been talking about in my last few videos, and it works great here. So let's get into it. I'll tell you about it. What does it mean? How can you kind of infer what it means? And what is it telling us? When can we use it? When shouldn't we use it? And how do we use it? So a lot of questions, a lot of answers, but we'll get them taken care of. So first thing I want to point out is it's an equal amount of buyers and sellers. I should do price if equal amount of buyers and sellers. So if there was 100 buyers, then there has to be 100 sellers because that's what the VWAP is telling us. Actually, let me backtrack. This is saying if we have an equal amount of buyers and sellers, no matter the number, this is where price would be at this particular point. So for instance here, price closes on this candle at 875.50, 875.50. VWAP says, well, if there was an equal amount of buyers and sellers, it was actually at the value would actually be at 863.94. Yes. And so there's a difference, right? We have what people are actually paying versus what the VWAP is. I imagine the VWAP as if you took the entire market, you put them all in a position, half of them are in longs, half of them are in shorts. The VWAP is where the average is where the position would be, right? If you took 100 buyers and put them in the market and you took 100 sellers and put them in the market, this line is showing you where their position is. Their open position is represented by the VWAP. So in a situation like this, the buyers are happy because it's far away. Sellers are pissed because it's far away. And again, using yeah. So you'll also notice, I skipped ahead there, sorry about that. You'll also notice there are two VWAPs on my screen. There's a blue one and a white one. The white one is from the open of the overnight session. So for New York time, that would be 6 p.m. The electronic trading hour session starts. All trading is during the electronic trading session hour. Most people are only familiar with the RTH, which is the regular trading hours, which is from 9:30 Eastern time to 4 o'clock Eastern time. The electronic trading hours are like a pre-market here kind of thing, a Asia session, a London session, and then New York session. So the white VWAP is just simply being anchored on the open of every electronic trading hour session, whereas the blue one is anchored on the New York Open. All right. Now it doesn't matter what lines you use. You can use both of them. I use both of them. You could have them both the same color. One's not better than the other. What matters is how the VWAP works. And so there's some patterns that I've noticed, and this is how I use it. So the first pattern is going to be that price needs to break away. So what does that mean? That means simply that price needs to, if it's at the VWAP, it needs to break away before you're even interested in looking to use the VWAP as a level as support. So price needs to break away. If we're just consolidating here, we're not going to use it. It needs to break away, come back, and then we can look how it comes back and look for a point there. So that would bring us on to point 2, or pattern 2, is price needs to touch and go. That means that price cannot just hang out and flirt with each other and then all of a sudden, oh, we're going to go now. That is not what we want to do. It just needs to touch it and go. And then the third thing is going to be related to the two VWAPs, is that 3 if your TP is beyond another VWAP, don't trade it. So essentially what that's saying is if there was a candle here and you were going to go long and you're like, hey, my entry's going to be at the close, my stop's going to be here, oh, my target's beyond it, I'm not going to take that. You don't want to trade when the VWAPs are near each other in a tight channel, and your entry is in between. If they're in a tight channel but your entry is on one side or the other of both of them, then you're good to go, in my opinion. So let's see what we're talking about. So first of all, price needs to break away. We have a breakaway right here. We have one. I'm just gonna mark. Oops, I'm just gonna mark the breakaways that I notice, and then I'll go back and look at stuff. Here we don't really have one. It's only 3 candles, and it's not very far. Same thing here. 3 candles, not very far. This one is 1, 2, 3, 4, 5, about 6 candles, and yeah. So then price needs to touch it and go. We have 1, 2, and then on the third candle, we have, it's this green arrow here. This is an indicator using these rules to find me signals. So price needs to touch and go in the signal here, this is where I could go. Actually, no, because this is separate. That would be more of my entry rules. This is just simply patterns I've noticed with the VWAP. So for a trade to be a good setup, you're going to need price needs to break away, indicated here by this box where these candles are not really touching the VWAP and it's making a semi-noticeable trend in an upward direction while breaking away from the VWAP. And then when price does come back to it, it needs to touch it and go, meaning price can't just again start setting up here before it then makes a move up or down. I'm not looking for that. I want it to touch it and then immediately give me a reaction. And that's what that is here, right? And then for me, with my entry condition, all I look for is it needs to have more volume than the prior candle. So this green candle has more volume than the red candle. And then the signal candle also has to be the lowest candle of the last, I think, 10 candles. Nope, it's not that one. Yep, of the last 10 candles. So this candle's low is lower than the last 10. A bunch of volume is coming in here. There's blue VWAP. In my head, I picture this as the market's open position of all buyers and sellers if there was an equal amount of them. So if there's 1 million people participating in the market right now, there's 500,000 buyers, there's 500,000 sellers. This is where the position is between all of them. So this is where I imagine if we're making an upward trend that broke away from the VWAP, if price comes back here and it touches it and gives me my entry condition, then that is telling me the buyers are stepping in here and adding. They're DCAing, whatever you want to call it. They're adding to their position, and this is where I want to step in with them because it's going to be a good amount of volume coming in, pushing me upwards. If this candle closes below the VWAP, or if it closes below the VWAP, I'm not going to take it. We're on the wrong side of it. So I know there's a lot of information, so let's go see if we can find another one. Can I bring these with me? Yes, anchor. Okay, perfect. All right. So let's see if we can. It's on my. Okay. What is? I've never seen this before. So I'm just gonna anchor this up here. Okay, this is awesome. Must be new. I don't know. All right. So let's see if we can find another example here. Let's find some bad examples, right? Let me show you what I'm talking about when these things don't happen. So we come up here. You can see we broke through this one. The first candle touched it, got a reaction. Second candle touched it, got a reaction. This wasn't a red candle, so we wouldn't take it. And then you can see we're just kind of consolidating here and we don't get a signal. And we just kind of work our way through it. Same thing up here. 1 touch, 2 touch, 3 touch, 4 touch, no signal. So we're not even interested. Same thing here. We didn't really break away from it for any sustained time, so we're not even looking at the charts at this point. Once we see price is just in between these two channels, we can kind of expect something like this to happen. And when this is happening, there's no point of looking at the charts. You just come back when price is broken away from one side or the other. So that's a nice thing about the strategy is if price is just kind of in between this area, you don't have to sit here and just do nothing. You can go move on with your life. Price needs to break away. That's step one. So here you can see price breaks away, right? We have this big area down here. See price comes back up. It price needs to touch and go. That is the definition of touch and go. Of course, you don't know what's going to happen in the future, right? But this is essentially an entry condition. I don't know why it's not. Oh, it doesn't have more volume. I thought it did. If this had more volume, that is a perfect example of what I'm talking about. It touched it. It would be the highest candle of the last 10, showing that, yes, sellers stepped in here last time they were at this VWAP, and they're adding to their selling position because this white line represents their average position between all the sellers. That's how I imagine this. It works really well. You can see as soon as price got there, those sellers just kept pressing sell, and it drove the price down. So that's what we're looking for, but that is not a valid signal. We need to find one. Um, oh, there was one in the overnight. Yeah, right here. Perfect. This is a perfect example of what I'm talking about. Let's actually go replay mode, right? So actually, this is two perfect examples, all right? So here we have price. It didn't break away for long, but it did make a new low, all right? And when it makes a new low, especially when it's the low of the chart, and that's just randomly whatever I have pulled up on the chart, it made a new low here. So that's telling me, wow, these sellers really stepped in here. If we just pushed a new low, when we get back to this VWAP, those sellers that pushed it down once might try to step back in and do something here. I'm going to go to the 5-minute and see if that gave us a signal. There, it did not. I'm going to go to the 1-minute. It did not. 2-minute. It did not. So sometimes you just don't get my signal doing this, and it can be frustrating because you can look at it and be like, oh, I should have known. We made a new low off the last push of the VWAP. When price gets there, if I see a red candle that looks pretty convincing, I could step in. But that's not what I do. I need volume. I need volume. But this is a pretty good example of maybe you have different rules. Maybe you look for something else to trigger you to get in when we're using the VWAP as a level. But let's keep going here. Again, we broke away from price yet again. So if price comes back up to the VWAP, that would be cool. We would then need to see price touch and go, and we would need more volume on our signal candle. So price just came back up. Okay, we closed on the other side, not once, but twice. So I no longer care about this. Even if I get a signal here, I'm going to be very hesitant to take it because we're actually starting to accept on the other side of the VWAP. So I have a signal here. We basically closed right at it. When I get a signal, all I want is I want the wick of the signal candle slicing through the VWAP. I don't want the body all the way up here. I don't want two prior closes above. None of that. I want a kiss and run away. Same thing here. We're just consolidating. Not interested. Okay, oh, we broke away. Okay, now I'm interested. Do we have a signal here? Well, let's see. We have price broke away, price pulled back, price just needs to touch it. Okay, price touched and went. Look at this is a signal here. We have more volume than the prior bar. However, this isn't because it's not the low of the last 10 bars. So technically this one is not signaling here on my indicator because it's not the low of the last 10 bars. This is still a valid signal. Happens to lose. That's why I like having this kind of swing of the last 10 candles needing to be broken before you get anything. Now I'm really interested in the VWAP because price has yet again broke away. So if price comes back to the VWAP, I'm going to look for a touch and go situation to take the price up higher. any day now, maybe. Kind of working its way down nicely. Now we can see clearly last time price was down here at the VWAP, buyers stepped in. So I imagine this white line as the average uh, price of the buyers of their open positions. So if I'm a buyer and I have a bunch of money to throw at the market, I may still have, you know, 100 orders, limit orders that weren't filled down here when price took off. And so now what I'm doing is I'm just kind of moving those uh, limit orders up as time goes on. So actually, let me show you. This is how I imagine it. I do this so that um, it's kind of creating a story, right? So like, oh, I wanted to get in there, I couldn't. Okay, like price is kind of taken off. It might not come, and this is just what I imagine. This limit order sitting at the VWAP when price breaks away, and then it's like, okay, is the price actually there? And I don't actually do this. I don't actually have a limit order sitting here. This is what I'm imagining the institutions are doing. And so then when price is getting back down here, I'm then looking for my entry condition. I need price to just touch it. It needs to be, in this case, it's going to be a buy signal, so it's going to need to be the low of the last 10 candles. Oh, look at that. Interesting. All this volume comes in here all of a sudden. You can see this bar is more volume than the last bar. That's all I need to know. That shows me, and this is a very bullish bar, that tells me buyers just stepped in. This is all buyers right here. Sellers are not really involved here. They did pull the price all the way down, but it wasn't aggressively. And then when it did get here, buyers are just like, hey, we're taking over from here. And so now this is really the first valid signal of my last 5 minute spew that I've done for me, right? Because I look for, you don't have to have the same entry conditions as me. You can if you want. And you can see price scares you a little bit and then ultimately works its way up. So awesome. This is 2R here. This is 1R on the first yellow, and then green is going to be 2R. You can take profit at different, swing points, structure. You could say, hey, you know what? What's the point of control of this whole area up here? Okay, I'm going to take profit up here. That would actually be a really good target. And then that ends up becoming, a really nice R trade. Now what I'm doing is I'm trading with real money. So when I do this, I have to then determine, okay, the most I can risk, oh, I can't do it here, is, 5% of my account value. So that means sometimes I can't enter here. I can only enter, back here because from here to here, my stop loss is equal to 5% of my account value. So, but that's fine because now you're risking, say, I don't know, say you're risking $20 because you'd have a $400 in your account. Risking 5% would be $20. But now the upside is so much more. So now you're risking 20 to get 100 or something like that. And that's where it becomes really fun because then you're like, man, like this is so much upside that $100 I just added. What would that? That would be over. That would be like 25% to your account value in that one trade while only risking 5%. That's insane. That's awesome. So the VWAP is just a really awesome level to use. It's one where the more you look at it, you can just see how price will come up, tag it, and then shoot off. Even when it consolidates at it, it still typically has a good sell-off if you're consolidating on the right side of it. If you're consolidating on the underside of it, you can typically wait for a volume, how should I say this? You can typically wait for a high volume bar to break away. So like here you can see volume increases 1 over from the last bar and price breaks away, and there's one where you could, jump in on this and grab 1R maybe or something like that. It's the end of the day, so I wouldn't trade that. But it's just an example. If price was consolidating on the other side, you would then typically look for a green bar with more volume than a prior candle to break to the upside. But because rule number 3 here would be broken, you wouldn't do that. Just looking for some examples. Right here, for example, we're just sitting on the line. You then have this increase in volume. You have one, yep, you have one right here. So even though we're consolidating here, even though it's not the highest bar, it is more volume than the previous bar. and you sell off for a second only for it to come right back, which is why I don't really like taking those trades. You then have the same situation right here. So there's different ways to use it for sure. I use it one particular way, and that was the way we went over it for the majority here. Yes, the indicator fires off false signals, um, but that's why I am pumped to see I can just anchor these rules here because that's awesome. I can now always have those on my screen. Let's see. I'm going to go to the gold market because I know gold uh, was bouncing off the VWAP pretty well at some times. Here's one here. This one is kind of a good example of why you don't really want to trade between the VWAPs, even though the first target is within it. Price just kind of dies out. It really does. When it's in between two, you don't get those explosive moves. I'm in replay mode. All right, so yep, here we go. You can see right here, price exploded first time it touched that VWAP. After it was below it, breaks above it, retest it. You can see buyers are like, "Yep, we're here, boys. Let's take it up." You wouldn't take that signal. Well, actually, you could. You do have a breakaway here, and then you do have a touch and go situation. That would be an incredible trade, actually. But now this VWAP, this white VWAP here, is also primed. It's charged. It's ready to go to look for a buying signal if price comes back down to it. Because last time buyers were here, they took you up into the new highs for the New York Open. So you can theorize that buyer should step in again here. Well, I don't want to just place a limit order here. How can I verify? Well, my personal entry conditions with the volume. And you can see price kind of fakes you out here, dips low, but then ultimately goes up. So I think that would have hit the full 2R. Um, no, very close. Either way, though, that was a winning trade, so that is nice. So it works on most markets. In fact, I haven't really seen any market it hasn't worked on because the theory is sound. It's the location of the average of all the market participants. If you put their position all into one, the VWAP is where their average position would be. Of course, that is then dictated by, what time period are you looking over the last session, 2 sessions, is it anchored the last week, whatever. I just anchor it to the current New York session and the current ET8 session open. Here's another situation. Beautiful price breaks away, comes down, gives you a signal, and you'd end up losing. I always put my stop right at the low of the signal candle, so that would have ended up losing. But you still see it's the idea was right. Even though you got ticked out, that's going to happen regardless. You can see the idea was correct. It went up, pushed higher, and because of that, we had a breakaway. Wait, what happened to my anchored text? Oh, maybe only on MNQ. You can see the breakaway, we touch and we go. Since we touched and went there, we can look for a touch and go here. We had a touch and we had a go. We had a touch, and we didn't really have a signal. But again, you can go down to lower time frames, and you can make your own rules for entering these trades. It's really just the setup of the VWAP. It's price breaking away and a touch and go situation. That's it. VWAP is a great tool. It's a great level, and I hope you guys found some value in this.